My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey, gang, welcome back. Today, we've got a special treat. We've got a very, very accomplished real estate entrepreneur. Andrew Reichert is zooming in from beautiful Pittsburgh, and Andrew's been in the real estate game for quite some time in different ways. So he started off in the brokerage side of things, and these days, he's also very, very involved in syndications, and he's got a pretty cool vertically integrated company that focuses a lot on impact investing. So, Andrew, welcome to the show. Great to have you.
Dave, thanks so much for having me. Glad to be here.
So, Andrew, as we're recording this right now, we're getting towards the middle of 2025 already. My goodness, mind-boggling. But maybe give us a snapshot. You've got two primary businesses that I'm aware of. You've got the brokerage, the realtor side of things. You've got the syndicator side of things. Maybe give us a snapshot of what each business looks like.
Yeah, absolutely. So the way we think of that is we call ourselves vertically integrated. So we both raise the capital from investors and we deploy the capital into multifamily assets. And then we also operate those assets. So we really feel like being the boots on the ground, the property managers, the maintenance people, being able to actually get our hands dirty, allow us to drive better investment returns and better results on the capital side. So we view it very synergistically. It's really, it's one company. Sure, we have two different brands, but it's really one leadership team, one ownership team, and we all kind of row in the same direction to, at the end of the day, try to produce great investor returns.
So was I out to lunch when I thought that you had a real estate brokerage in addition to the real estate investing company?
So our real estate brokerage only does acquisitions for our investment company.
Okay, well, there you go. Yeah, completely vertically integrated. Okay, well, that's cool. So what does the portfolio look like today as of mid-2025? How many different properties and where do you have them?
Yeah, so we have 3,600 units across about 65, 70 properties that are all throughout what we like to call the heartland. So we love to acquire in Pittsburgh and markets like Pittsburgh. Those are markets like Cincinnati, Cleveland, Columbus, Buffalo. We even go to tertiary markets like Morgantown, West Virginia. Our real thesis is less about the specific geographic area, more about the economic drivers. So we really like markets that are undergirded by the meds and the eds, healthcare, education, financial institutions, really diverse economies that are slow and steady up into the right kind of economies.
I like that, meds and eds. I'm
Yeah.
gonna write that one down. Very cool. So Andrew, what is we know where the markets are that you like to go to. What does the actual property buy box kind of look like? What kind of properties do you guys like to purchase?
Yeah. So one of the things that we think is real differentiator special sauce for us is we love to buy things that are a little bit too big for the mom and pop investor, but a little bit too small for the institutional investor. So we're right in the middle, around 100 to 150 units is kind of our sweet spot per acquisition. Around maybe a $10 to $15 million acquisition is pretty typical for us. And we really focus on workforce housing, Class B, average rents, $800 to $900 a month when we acquire them. We're going in at around 70K a unit, doing some light value add, maybe 7 to 10K a unit. And then we have them worth, 100, 120K a unit, well under replacement cost, even after the renovations.
Yeah. So it really is about value add that you're looking for. Is that correct?
Exactly. Yeah. We like to think of it as light value add. There are some other operators that are doing much heavier value add.
Yeah, you don't want to do a complete overhaul kind of thing, but
exactly.
So what light value add, what does that typically look like for you guys? What are you refreshing or working on typically?
Yeah, it's typically finishes. So we're doing flooring, painting, countertops, maybe a new appliance program. That's inside the unit. And then outside the unit, we're typically doing some exterior upgrades, some landscaping, some new signage, things that really add some curb appeal. So it's mostly things that are visible.
Mhm.
Sure, we'll replace HVAC units and roofs when we have to, but the real areas that we like to spend our dollars on the value add programs are more the visible, finishes and fixtures.
Very, very cool. All right. So you mentioned that you've got a vertically integrated company. You guys are based in Pittsburgh and you've got properties kind of all over the place. So what do you do for dealing with the property management side of things of those properties that are a little further away?
Yeah, so we actually staff the regions with employees of our firm.
Really? Wow.
Yeah,
Okay.
so a lot of people, will hire a third party property manager
Yeah.
in those markets. And actually, when we enter into a new market, sometimes we'll do that for a new asset, just because we need a little bit of scale to really
Yeah.
make it work. But if we can get ourselves to a few hundred units in a new market, we feel really comfortable staffing those. All of our back office is here in Pittsburgh, and we're a very technology forward, company that leverages outsource staff and technology to really optimize some of those back office functions, so
Hmm.
that the folks who are the boots on the ground can literally be anywhere and still, really function off of our technology stack and our back office. And so, we'll employ a property manager and a maintenance person to work on each property or a group of properties in new markets. And they're Birgo employees. They work for our firm.
So do they have their own little office? Are they based out of one of the buildings? Are they working from a co-working space? What does that kind of look like for the staff on the ground in a smaller market where you
Yeah.
just got like two people kind of thing?
Yeah. Typically based out of one of our properties.
Okay.
If we can have like an anchor property with a good 100 units in an office, we love that. If there's
Mm.
a property that's 150 units and we want to acquire it and it doesn't have an office, we'll often convert one of those units into
Mhm.
an office.
Yeah, that makes a lot of sense. Cool. Very, very interesting. And what's your philosophy, Andrew, when it comes to exit strategy? What are you guys looking at doing? Are these kind of medium term, short term, long term holds? What do you guys do?
Yeah, so our funds, so we raise funds actually. Most folks raise capital on an individual deal, an individual
In
syndication.
syndication. Yeah.
We actually have always raised funds since 2015. We launched our first fund, and our funds have been 5 to 10 year funds. So first couple of funds were 10 years. We did a couple 5 year funds, and our newest fund is a 7 year fund. So at the end of that fund life, we'll make a decision on an asset by asset basis. Do we want to sell the asset to a third party? Do we want to recapitalize and refinance the asset, or do we want to do a portfolio sale? So those are really our three exit strategies, and it really just depends on the asset. Sometimes we'll look at an asset and we'll say, "Hey, it's run its course with us. It's time for somebody else to own this asset." Sometimes we'll say, "Hey, there is another round of value creation here. This asset's cash flowing, and if we put a little bit of extra capital into it, we can actually bump rents even further." And so those we actually underwrite as if it were a brand new acquisition. We say, "Hey, what's the price we want to sell it for? What's the price we would buy it for?" If those two meet up, then we'll do a recapitalization of that asset.
Oh, very cool. Very smart. So it's been a little bit shaky for the last couple of years with a lot of folks in the multifamily space. Have you guys seen much impact from that yourselves?
I'd say yes and no.
Hmm.
So some of the shakiness in multifamily is just a result of the prolonged high interest rates.
Hmm.
So, really since 2022, there has been interest rate increases. And as a result of that, folks who had particularly variable rate
Hmm.
loan debt have, their mortgage used to be X and now it's 2X, right? Like just like what
Yeah.
happened in the residential space in '08 and '09 has happened to a lot of multifamily owners in 22 and 23 and 24. Um, we actually never borrowed variable rate debt, so we've always borrowed
Oh,
fixed
that's
rate.
awesome.
Yeah, so maybe we got lucky. We're certainly more conservative as an operator. So all of our existing debt matches the life of the fund. So if it's a 10-year fund, we borrowed 10-year money. If it's a 7-year fund, we borrow 7-year money. And so we don't have any interest rate exposure. So our existing assets are doing fine. If you just think about new asset acquisitions, it's definitely made it harder to acquire assets, really for two reasons. One is Fundraising is a little bit more challenging in this environment because capital is sitting on the sidelines,
Yeah.
but folks are often, saying, "Hey, I'm doing fine in the stock market," or the interest-free rate is 4%, 5%. Should I actually take, risk for 12, 13, 14, 15%?
Yeah.
So capital is a little bit tighter, and then the acquisitions are just harder to pencil if you got to borrow money at today's interest rates. We're not buying as many deals because there's not as many deals penciling.
Are you noticing prices starting to inch down for deals that you're looking at, or are they still stubbornly high?
Oh man, it's such a good question. I think it really depends. We sort of expected there to be a little bit more distress in the industry. We expected folks to be, hitting.
Motivated?
Yeah, more
Yeah.
more motivated.
Yeah.
Exactly. The banks banging on their door, them
Yeah.
them needing to give the keys back, things like that. There hasn't been as much distress and pain as we expected. I do think prices have stayed stubbornly high. Also, you would sort of expect cap rates to swell a little bit as interest rates have gone up. We haven't seen a ton of that either. Cap rates have also, kind of stayed stubbornly low.
Hmm.
A little bit of swelling, but not a ton. And so, we're looking for deals that make sense. And usually, in any environment, there is an opportunity. What we're seeing right now is those opportunities tend to be a little bit more value add. There's a little bit of hair on the deal. There's something
Hmm.
creative that we need to figure out. We've come up with some creative strategy for repositioning the asset. Things like that we found to be pretty effective.
So I was looking over your information ahead of time, Andrew, and it seems like, impact investing is important for you and your company. What does that even mean? What is impact investing to you?
Yeah, it's a great question. It's particularly a great question right now because I feel like that term right now in mid 2025 has actually kind of been hijacked a little bit. So, investing, for me, let me tell you my perspective on it. So, when I first got into real estate investing, I sort of fell in love with the impact that it has on people.
Hmm.
So it's like real estate is the roof over your head. It's the place where you go to work. It's the community where you're gathering. Like real estate is everything. It's the restaurant where you're going out to eat.
Yeah.
Like you're always in real estate. And so I just thought to myself, wow, I can really impact people's lives by being a a good owner, a good operator of real estate and actually viewing it as stewardship. So I'm
Okay.
stewarding this asset for the time that I'm here and I'm stewarding investor capital. It's not mine. I'm actually just a steward of it for the time that I'm here on this earth. So I always tell our team, we have 100 employees, and I tell our team, hey, we're in the people business, not the bricks and mortar business. And I think that's just absolutely true, by caring for residents well, actually by like loving residents well. I know that's like a strange term to say, but we actually believe that that has generated outsized investment returns for our investors. So
So
in
what does that mean, loving your residents? Like concrete differences between what you guys do and non-typical non-impact investors. Where do you see the big differences?
Yeah, well, first of all, you got to remember the space in which we're buying. So we're buying Class B workforce housing. We're often acquiring from generational owners
Hmm.
who have owned the asset for 30 years, 40 years. And we find a couple things when we acquire from those owners. One is there's often a little bit of neglect of the asset. So, they're we'll acquire an asset and grandma will say, oh my gosh, I've had this leaky faucet for 10 years and I've just gotten used to it. Or this toilet has never really worked correctly. And
Yeah.
so we have a 24/7 maintenance hotline. Somebody's there the next day. We resolve the issue and grandma's like, oh my gosh.
10
And
years. Didn't
yeah,
know it could be
exactly.
so good. Yeah.
And we're like, we don't think we're doing anything different. Like you submitted a maintenance work order request and we came out and did our job. So that's one example. Another example, honestly, this is going to sound so silly. We answer the phone.
Okay.
Like
A
we're
live person
a
versus,
live human. Yeah.
yeah.
It's just like, we acquire assets from people that they're like, I've been calling my landlord for 6 months. I don't know if he's alive or dead or what. It's just like Again, 24/7 hotline. You can submit a work order online. You can pay your rent electronically. Like we take institutional professional property management and
Okay.
we bring it to an asset class that is just not used.
Something that's been run by a mom and pop for a
Yeah,
long time, and it's sloppy. Okay,
exactly.
yeah. Well, anything else that kind of so you're basically just bringing it up to snuff. But is there anything else that you guys do a little bit differently, like to provide even more impact for your residents?
Yeah, there is. You know,
Yeah.
I always feel a little bit silly bragging and like talking about how we're so altruistic, and I don't want it to
Yeah,
come. Yeah, I don't
that's
want
what
it to
it's
come
about.
across that way.
Yeah.
The reality is we do care about our residents and we just want to create a good experience. But we do things like we actually help our residents with things outside of their ownership of the property. So,
Mm.
we've even helped residents with home buyer programs with financial education. People
Okay.
would say, well, why would you help one of your residents buy a home? Then they're going to move out. And we're like, hey, well, we do that. We have a line out the door of people that want to move into that unit because they know that we actually care for them as a person, not just
So
like
what
a
does that
number.
even look like? Are you sending them a book? Or are you signing them up for some sort of a course? What is that?
Yeah, I
How does
mean,
that look?
that's a great question. So years ago, we actually launched a nonprofit to do it ourselves. So we
Okay.
launched a nonprofit. We were teaching financial literacy cohorts. What we realized though is that we are better off us being the operator and
Yeah.
us connecting them to resources. So what it looks like is we'll bring in a regional bank, for example, Dollar Bank is a bank that we work with, and they actually have a first time home buyer program. They do financial education and financial literacy training. So we'll just direct our residents to them. But it's not just that. I mean, we'll do things like throw a pizza party at our property just to get them all together.
Yeah.
And so it really runs a gamut of the stuff that we think is really simple to the stuff that we think is much more complex and really game changing.
So I'm imagining it must be your boots on the ground property manager that knows what different people are looking for and who to connect with what and when and that sort of thing, when to have the pizza parties and that sort of stuff. How do you empower those property managers, on-site property managers to do that? How do you find the right kind of people that just comes naturally to versus just punching the clock, doing the minimum?
Oh, that's another great question because we've honestly gone back and forth um, around do you hire somebody that's an experienced property manager that knows how to manage property and teach them our way, which tends to be a little bit different?
Hmm.
Or do you hire somebody with no experience in property management, and you've got a little bit of a blank drawing board to really train them in the way that we do it?
Yeah.
And I find that we do both. But the main thing is we hire for core values fit and mission alignment and not as much for skill. We definitely want skill if it's there, but we
Hmm.
find that we can train the hard skills of, rent collection and property management,
Yeah,
leasing.
it's not rocket
It's
science.
not
So
rocket
it's
science.
easy to find somebody, start with somebody with the right attitude and the mindset and the values and teach them this stuff versus get some cranky old property managers that's been doing stuff forever their way and try to teach an old dog new tricks, basically, is what I'm hearing.
You got it. Yeah.
Yeah.
And by the way, sometimes that works just fine. So
Hmm.
we don't
It
discriminate
depends on the
against property
personality,
managers with a
right?
lot of experience. It
Yeah.
depends on it. Really,
Yeah.
the key indicator of success is core values alignment and mission alignment, and not really the skill piece.
Very, very cool. So, Andrew, as we're wrapping up our conversation here, what are your plans? What are your goals? Where are you taking the company over the next 12 months or so?
Yeah. So we currently have 350 million of assets under management. And just in terms of the big picture, our goal is to get to a billion of assets under management by the year 2030. Definitely see that happening. I actually think we'll probably exceed that and maybe even hit that target before 2030. So in the next 12 to 18 months, we're going to be raising capital. We're going to be acquiring assets. We're also disposing of our first couple funds. 2015 fund was a 10-year fund. So we're starting to
Time's
sell
up.
some assets and, yep,
Yeah.
reaping some of the benefits of that. Returns have been incredible on our first two funds. Our investors are super happy with us. And so it's really just continuing to build trust in our investment base and continuing to kind of just do what we've always done.
Exciting stuff. If people want to connect with you, Andrew, where should they go?
I'm pretty active on LinkedIn. You could check me out, Andrew Reichert, Reichert on LinkedIn. Also, our website is birgo.com, birgo.com.
Perfect. Andrew, thanks so much for being on the show.
Thanks, Dave.
All right, everybody, take care, and we will see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.